Good morning, everyone. Welcome to the Euro Trade. Let's see what the markets have in store for us. I do believe that we have some further restrictions on combines and XFAs on the metals. So I might actually focus instead on the energies. So I've got RBOB looking quite interesting. Now the gamma flip in ARBOB is sitting at 190, which is way below, well, not way below, but it's not too far from the 8-year low, which is at 190.32. I'm just gonna put that as a marker. If we're meeting for the first time, I have been trading for 19 years. My name is Deeyana Angelo. I'm better known as Market Stalker D. Due to my approach of waiting for my levels and being pretty stubborn until the level is there. I am a commodities trader, which is why I focus more on metals and on energies markets. They have been my specialty since 2013 when I became a prop trader, but at that point I was already trading for about 5-6 years. And before my entry into the prop industry, I was a swing trader. So waiting for trades intraday is literally nothing to me. My average hold time is somewhere around 100 minutes. All right, so let's focus on RBOB here. So I'm just going to change my dome. And I'm also going to put the volume profile fixed range from Friday. Now, NYMEX starts at 2 p.m. my time. I am GMT. I live in England. At the moment, we're sitting inside the COMEX value area. Sorry, the NYMEX value area. We're talking energies here. Showing some strength above VWAP. But when I look at even the London range, we're sitting also just outside of the value area after opening inside. It could mean that this is a bit of a breakaway to the upside. I have average session range for the London session up at 197.06. So I'm also going to mark that with tiny dotted lines. So ASR high is my my concept of using the regular trading hours or the current active session to figure out exactly where the tops and bottoms might be statistically, depending on how the product trades and what sort of ranges it does for that particular time of day. I do use a lot of profile and real-time order flow, so some tape reading too. And the final thing I'm gonna do here, morning, is to line the initial balance high and low. Initial balance is the first hour of trading, so whatever high and low is created during that time period, I mark it. And although it's not always the case of entering because of it, it's an orientation tool just to see how the auction is progressing. Is it strong? Is it weak? Is it medium? And then we take our decisions based on that. At the moment, I'm a little bit reluctant to take the long, even though I know that at this time of day, you usually get these like fake out longs during the London session. And I am on combines because of all the restrictions. AG Trader says, I was going to see if you would have said, instead I'm going to focus on NASDAQ. Never. No. I would have focused on DAX if we had DAX, but you know, this is what these streams were supposed to be about, but we don't really have DAX on Topstep, so therefore that's not an option. But you know, I bounce between energies and metals, so base metals, precious metals, and when one market goes insane, I always have something else to trade instead. Right, so an idea here would be maybe if RBOB tags VWAP and then maybe creates or attracts some more buying, that could be an option. But breakout trading when we have a potential for a more range-bound market conditions is not the best. So even if I go into a long, I want to see a decent pullback beforehand. When it comes to the relevant options levels, they're pretty far away on RBOB. So like I said, 190 is the gamma flip. Some moderate call wall there as well. But really 2 evens is the one that has been on the charts forever. So we are going to make sure that we're not entering against the day sentiment. So we need some volume, as always. Let me grab some coffee. Black Swan Traders, what is that image behind your pic? I have no idea, if I'm gonna be honest. Let me see. What did they put? I don't know, it's some kind of drilling process or melting process. Yeah, I've never really realized. That jacket is interesting. I'm getting a 90s copper vibe. I like the 70s, 1970s copper vibe. Yeah, I like the 70s and 90s fashion. I am an 80s child, so I'm kind of stuck in that era, I suppose, even though my my regular clothing is just very, very simple. But, you know, I figured I would buy some jackets, and then whenever I trade copper, I wear this. I was actually in a copper position earlier, but it didn't quite do what I wanted it to do, so I promptly closed it, and then I tried to scale in, and it wouldn't let me. So obviously some restrictions are still in place, and therefore practicing scaling in when you can't scale in according to the risk model is a little tricky. You know, it's a little tricky, so focusing on something else. The real Enoch says, look like a 90s child. Yeah, I've always looked younger, but I'm actually 45. I do not hide that. I'm not a spring chicken, not old, but also not that young anymore either. And most people always think that I'm much younger than what I actually am. Even in real life, because, you know, lights can forgive quite a lot of things, but even in real life. My eyes have started to age a bit, so I'm getting little fine lines here. Which is okay, you know, that's a privilege. Aging is a privilege, not many people get to experience it. Alright, so a little bit of a pullback here on RBOB. Maybe I should put the London values as well, because London tends to be pretty active. So let's do another fixed range volume profile and then go to London. Now what I do with the profiles when I'm looking at individual sessions is to go and see whether each session without the overlap can provide more insight. I don't like to do this, which is what some people do. It's like, oh yeah, let's just do the entirety of this, because it will smush two different sessions together that have very different players, very different volume. So what I tend to do, I just cut it off. So I'll cut London off at the start of the next session. And then I just looked at them individually. I very rarely carry over trades from one session to the next. And for the NYMEX session, I do use the entirety of the electronic trading rather than just cutting it off at the NYMEX settlement, which is 7:30 p.m. my time. I might have a look at the natural gas as well, because Natty has been doing some crazy gaps. I mean, that's a feature of Natty anyway. Right, so from last week I had this moderate put wall area, GEX 2. I am looking at the 3 evens for maybe some bigger intraday swings. So we're not there yet, therefore smaller trades should be the name of the game. Kitan Caro says, my AI said getting in D-Stream is a great idea to have a companion for your trade session, so here I am. Yeah, that's exactly what it is. And in fact, most of TopstepTV was created to give people a sense of community, to have somewhere to go when you're just trading by yourself. You know, days of going into the office, having a whole bunch of people around you, they're long gone, right? I used to go into the prop offices, so that wasn't like the pit, but it was nice having to talk things through with your colleagues. You learn a lot. And in some shape or form, we already have that with TopstepTV. And in fact, last week I've learned something new. Somebody asked us a question on group coaching when Hogue, Hoop, and me were on. They asked the question about the 30-minute time frame and why do we all like it so much. And I said, well, I've noticed that there are certain things that happen at the close of the 30-minute time frame. So if you're going to have a dedicated move, 30 minutes is when things start moving. So I said, I assume those are some institutional algos that run on a 30-minute time frame. And then Hoke chirped in with his endless amount of experience to say that when he was working as a broker, he had a friend who was executing these large orders, or wanting to execute the large order. And he was, his intention was to get the average price over the entire day. So he would instruct Hogue to discretionary place positions at every 30-minute close. So that's one reason. And then Hogue said that these sorts of algorithms are based on the institutions trying to get that average price over the whole day. And it totally made sense, right? And it kind of shocked me that he knew why things happen at the end and the beginning, effectively, of each 30-minute bar. And I always knew that was the case, that something was up, but I just didn't know the reason for it. So yeah. No, the metals are not cut off. The minis are, so you can't really trade minis in any accounts. They have limited the combines and XFAs. I don't know about live accounts. I think they are limited as well. But basically, it's a combination of large margins, and then they have a core position that you're allowed to do. However, it very heavily, by the looks of it, very heavily depends on the amount of balance that you have in your account at the time. So whilst you're wondering why is it that it's not allowing you to even trade one MGC, it is very likely because of the balance. And I am assuming that they limited the movement because a lot of people were blowing out and a lot of people were trying to trade minis, and it would be just like a matter of high risk of ruin. Now, whenever you're in a live account, you are trading real companies' money. The risk team has to be mindful of that. And if a number of people are losing their live accounts, never mind XFAs, that is the cause for concern, right? Yeah, so Vinny says, I just activated my first XFA, and Silver says, I don't have enough margin to trade one micro. Yeah, so you need to have probably at least 2,500 of balance in there to even cover that intraday position, so you won't be able to trade it. If you have a decent balance in your XFA, I'm guessing you will be able to trade 1 and 2 micros, or whatever the current restrictions are. If you don't have that sort of balance, then the margin is going to say, computer says no, if you've ever watched the British sitcom. So computer says no until you have the big balance. Listen, we've got 35 markets available at Topstep. You don't have to trade the metals, okay? There's other things. RBOB is still not under any restrictions. NAT is, so natural gas has been doing, like I said, these big gaps, which has also caused the margin expansion. You know, we all want to be safe. I looked at the AMP futures margins, and it's insane. Like for one silver, which kind of matches what my risk model actually says. So my risk model says that you shouldn't be trading 1 micro silver until you have $17,500 in your XFA. Before that, it's all very tricky. I've done some tests to see what the size of the stop losses that won't get stopped out in like a nanosecond from entry, what would that be? And it gave me a number of 164 ticks. So let's do some math. So if 1 micro silver is $5 and you're using 164 per one single trade, that's $820 of risk. So if you're starting a new XFA and you're looking to trade silver, you're asking for a blowout, or you're asking for luck, right? You're like, oh God, I hope I don't get stopped out. So anything less than that, you're looking at a survival rate. Just statistically, I've done stats on this, so you're looking at a survival rate of 8%. So any stops with a random entry, yes, because that's how I do my tests, only 8% of those trades survive. So please be mindful of that. I'm just going to clear my throat for a second. Now, when I say 8% survival, that has nothing to do with strategy. It has nothing to do. It's just pure stats, right? Pure math. Picking a random entry and seeing how long the trade survives, and how many of them survive for how long. So think about that. So new XFA, the last thing you should be doing in these sorts of ranges that increase your market risk ridiculously, that is not what you should be doing if you want to survive. I'm assuming that we all want to survive rather than to blow up on the first couple of days. So yeah. MK812 says, why can't I still trade MGC? I'm literally just talking about that. It's connected both to the restrictions and to the amount of balance in your current XFA. If you don't have much of a balance, so you have $1,000 or $1,500, that's not going to be enough. So, you know, 5,000, 10,000, 15,000 of balance, you can trade the micros. If you don't, the system won't allow you because the margin is going to be too big. The real Enoch says, never would have guessed 80s. You look like a 90s child. Yeah, I'm actually born in 1980. So I am the final year of Gen X. Granny D over here. And thank you. Thank you. I should buy you a drink sometime. Does Topstep send out plaque certificates or just awards on the account? No plaques, just milestones. So it's actual cash. In the live, you can earn milestones when you cross a certain threshold. They used to have a 5K payout club, but only for the USA. So if you are located in Europe, like myself, or somewhere, you won't get it. I hear that they're making that into like a different package. They're gonna have bigger ones, and because you know the 5K club used to be a big deal with the old style of prop firms before we had a million prop firms cropping up left and right, and an equal amount of them blowing out nearly every single week due to bad risk management usually, or they can't do math even without the volatility, but that's another matter. And you know, Topstep has been around for a long time. Are they still trying to change stuff and innovate? Yes. Are they always successful in it? Well, no, you will stumble when you're trying to innovate. Not everybody's going to like it. But yeah, they've been here for a very, very long time. I've been with Topstep in some shape or form since 2015. I was their first female funded trader. That's how I got to meet the team. And I don't know whether you know this, but in 2024, I was the first live account on Topstep X. And I at that time agreed to work with the development team on some bugs and stuff. I think those bugs have persisted until last year, but they have taken serious steps now to make sure that everything works properly. So, you know, there will be stumbling things along the way. There will be moments where they do get it wrong, but it's Topstep, you know. It's Patak. He's a visionary, and he just he keeps going. You know, you're not gonna see him give up just because a couple of Twitter posts don't like what he's doing. You know, they've survived for this long for a good reason, and risk management is one of them, right? At the same time, they're probably the only prop firm around that is a lot more trader focused than some of the others. And I know there have been allegations, you know, I mean, you're working against a trader. If they were working against a trader, they would allow you to trade, you know, 1 million accounts, not just 5. They would allow you to you know, trade metals when the risk of ruin is sky high. So, you know, you have to trust that the risk team knows what they're doing, and there's reasoning for that. I mean, look at the margins on AMP. But let's just, you know, compare the real life here. So let's have a look. We're gonna go into metals. Now, comparatively, crude oil, if you want to trade 1 mini on crude oil, you, even overnight, not just intraday, but overnight, you only need $4,750 to hold in your account. Now, I'm not quite sure why they limited the nat gas, because nat gas, like, it always does these gaps. So if I'm going to criticize anything by the risk team, it will be including nat gas in that whole story. And I would argue that even, you know, copper, it had 2 volatile days where it went 1,800, but we're talking, you know, such isolated days where, you know, now it's back to doing the normal sort of 300 to 500 ticks a day. That's normal liquidity. So I'm not really sure why they would include that. And it's such an odd product that I didn't think it was. I think I was like one of the only people trading it. Now, I don't know whether it's because of me trading copper and having success with him, she. Putting genders onto products now, are we? But yeah, I just don't think that that's a dangerous product at the moment. It was, you know, a couple of off days when we actually got some news about copper demand doing pretty well, and naturally the slight oversupply they brought the prices to where they should be. I think it kind of ran up a little bit too high, and now it's back in the range. So if, like I said, if I was going to criticize anything by the risk team, it would be including natural gas and copper into that whole mix. And is it because people were trying to trade minis and they got caught up in the 1,800 tick day? Maybe. But then natural gas, I can see that the margin is still not up. It's still 5,500. Did they notice that natural gas is doing gaps? Well, it's always done weekend gaps, so that doesn't really make much sense. However, silver and gold, yeah, there's something really odd going on in those two products. So I'm not against restricting those because they are dangerous. But as long as natty and copper are still moving between 300 and 500 ticks, that's fine. I mean, I traded copper in a live account all throughout the tariffs, right? And we never restricted that. We had plenty of 1,000, 2,000, 3,000 tick days, and they never restricted that. So is it because maybe I've made copper a little bit more popular? Because I keep seeing people in chat, even on the Dane Time show, that, I'm in copper, or I trade copper. Nobody knew about copper until I started talking about it. And to be fair, I was talking about silver way before anyone was interested. Everybody was like, yeah, D, shut up with your weird products. And now everybody seems to be a silver trader. However, now it's gone too far the other way. So yeah, just looking at these margins. So 5,500 is still the same on natural gas full mini, even for the overnight positions. So that doesn't really make sense. However, here we go with the metals. Gold, big gold, just to hold one single contract overnight, you will need $52,000. For micro gold, you need an absolute minimum of 4.9K. One micro gold. So here's what's happening. If you want to trade one micro gold, you need to have, at the very minimum, $5,000 of buffer in your combine or XFA or your live. And I would argue that you probably still shouldn't trade that because it's and the maintenance, it's not a random number. Remember that? It's not like, we're just going to hike up the numbers. They have data that tells you how much wiggle room you have trading one micro gold. And at the moment, that would be about 5,000. And again, I said, even with the silver, I would argue that that you would need to have safely $17,000 to trade one micro silver. I'm seeing that the margins have gone up to 15,000 on micro silver. That tracks, it tracks. So, be very careful. But hey, if you have $5,000 in your one XFA, so you can't do multiples because, the companies don't do multiple accounts, not prop, but actual brokers. They only allow you one, maybe a sub account if you can give like a really good reason why you would want a sub account. Otherwise, they are very, against people having 1 million accounts and then copy trading. It's just not a thing you do. And yeah, so I don't really get the micro copper, 1,320 for a margin on one micro. So yeah, it's gonna be a balance thing. Because before these were like on micros, it was absolutely ridiculous. It was like $500 to keep one micro open. So did you know that they now have a 1 ounce gold contract? We don't have it on Topstep, but that one is $0.01 per tick. And for that, you only need $500. Nano Silver just started trading today, 100-ounce contract. Again, we don't have that. I wonder whether AMP added it already. Let me have a look. So if we had that, maybe, you know, maybe you could have it. I'm just gonna look up in symbols, see what we've got. So AMP doesn't have it yet. And do they have this gold? Yeah. Yeah, so we have we have 1 ounce gold, definitely. On AMP. See what that looks like. It's a very innovative symbol. M10ZJ, which is a April contract. I mean, it looks liquid. Looks liquid. So here is the 1 ounce contract. M10Z. So micro, I suppose, 1 ounce. And then the contract. That's the kind of world we live in. We have 1 ounce gold now available. What was it gonna do? Yeah, let's see what the volume. Oh, a lot of people are trading it, guys. So we have 53,000 in volume. It's hilarious. That's good liquidity. Because I was worried that when they introduced, you know, the tiny contracts, then nobody is gonna really be interested. Clearly, retail's interested, so. So yeah, let's look forward to the day when we have nano silver, 100-ounce silver arriving. And then that would be a lot more palatable for these accounts. Otherwise, you know, remember we were working with a 4.5K drawdown at the largest drawdown amount? That's difficult. Just gonna go down to a smaller time frame to see what RBOB is doing. Didn't quite reach VWAP here. The volume is still below the average, so I want to wait until that picks up a little bit, and then we might have that long. Trading Nickel says, I made an indicator a couple of weeks back which tells me if silver is too volatile to trade within my risk limits, and it didn't turn my whole screen red last night. Yeah. Yeah. I mean, it's slowly, ever so slowly starting to settle. I've seen some days now that haven't been super crazy, but it's still very, very volatile. So yeah. Hey, Paul, good to see you. Yeah, again, firms that are not restricting, I would be wondering if they're working with the trader in mind, because do remember there is a business model, and you know, some practices. I'm not saying that every firm is like that, but there's a number of firms that really don't have your best interest in mind. So just be careful out there. I've warned against a few of those, and in the beginning I was only going with the futures firms, and because, you know, there were only a few of them, and they were all reputable at the time. But as the time went on, so I was warning against Forex and CFD prop firms that would allow American citizens to trade SPX and, you know, CFD versions. And at the time, that was heavily illegal for the US residents. So I'm like, how is this even possible, right? What are these people doing? What, they're just hoping that the regulators are not going to look at them because they're sim firms. And I warned heavily against the Forex/CFD firms that were doing that, because I said, guys, it's not legal for US residents to trade CFDs. And people were like, yeah, D, whatever, we'll still go to Forex firms, they're cheaper, because they were cheaper at the time. But unfortunately, it turned into a complete fiasco with many firms blowing up, then some really unscrupulous practices coming up that they were having these, because I don't know how many people know that there's a difference between CFD and futures. Futures spread, when they give you a spread, it's not like a random spread that you set on the back end of your prop firm admin area. It's actually coming from the actual futures exchange. So you can't manipulate it. You can't. You can't just go, well, I'm going to increase the spread for this person who's doing really well. You can't do that. But Forex and CFD firms had software that enabled them to manipulate spreads. So if they saw the 0 spread or 1 tick spread, and they wanted to mess with a trader, they could increase that to 12 ticks, 15 ticks, 20 ticks. And then people wouldn't make money, right? Because then suddenly you have to account for the additional spread. That's also the reason why I stay away from CFD prop firms to this day and haven't actually touched them since about 2016. But futures firms, the spread that they give you, it has to be from the exchange. So there's no dodgy stuff happening there. But then, we started getting other firms that are, getting a lot of stick for, again, denying payouts and stuff. So that's become the new thing. I've been in the industry for so long, and I'm just kind of watching from the sidelines and going, this is weird. And, we've got to a point where you have entire groups of people who are trying to manipulate and game the system in order to gain a lot of profits. And of course, the multiple accounts are rife for that sort of activity. So I'm in favor of people who are struggling with capital, but they still want to get into the prop firm game, and they're really advanced, decent traders. They know what they're doing. They have confidence. You can copy trade, but just be mindful that copy traders can malfunction as well. So, I was reading Twitter last night, or Twix, however you want to call it, Twix. And I'm shocked at the amount of people who have the reverse button on their thing. And then they touch the reverse button, and then obviously one account closes the position, the other one is a little bit laggy. And they're like, oh, oops, and why do you even have a reverse button? Like, do you think that the fails are going to be instantaneous? Like, even if you hit a reverse button, and I've done that, I don't have it normally, but I've done the reverse thing for the first time ever during the reversal challenge. And I can tell you, there's a huge lag. You hit reverse, it like stops, and then it reverses. And then what happens if you have an OCO bracket? Do you just have like a whole bunch of random orders kicking off everywhere? That's not good trading habits practices, right? That's a terrible way to execute. Like, what are you doing hitting a reverse button on copy traded accounts? So I don't know. I didn't get a hedging email. I'll be very upfront about it. I don't think that any of the coaches did either. At least not the ones that I talk to quite frequently. And I've seen that people are complaining. It's like, oh, well, I only held it for 15 seconds. But hold on. So you were in a hedge. Whether it's 15 seconds or 3 seconds or a second, it doesn't matter. Something happened. Oh, it was a copy trader. Yeah, but, I hit the reverse button. There we are, right? So I'm not going to try to side with Topstep or anything, but I'm just saying that there are certain trading practices that you shouldn't be doing. And, you can't, the terms and conditions very, very clearly says that hedging between accounts, whether they're real or not, is simply prohibited. So it's another case of, whoops, oh yeah, I did something and this malfunctioned. But it was by and large, I think it was the reverse button and the lag. There's always a lag at the execution. You can't just hit a reverse button and expect that everything's going to work well. It's like this. And if you're in a live account, hitting the reverse button is also like sometimes you wait for 15 seconds to get a fill. 15 seconds. It's like a lifetime in executions. And of course, things are not going to work perfectly. You know, we're talking about copy trading that, you know, has to send a signal. And you know, I'm trying out to see how it works. But I'm not going to hit the reverse button because I haven't really used their copy trader before. And I probably should have just to see how it all works. But, you know, I spend most of my time at Topstep in live accounts. So I don't even, you know, most of the time I don't even have a chance to do it because every time I'm back to the XFAs, I tend to be pushed into live fairly quickly. I'm trying to hold on this time to be at the XFA stage for a little bit longer so I can build up a balance. But yeah, so you know, it's a whole hot topic for sure. And I don't engage on Twitter because A, I'm too old for that shit. And second of all, I have zero desire to argue with Muppets that I've never seen in my life, that I will likely never meet. And frankly, most of them are just trolls, you know. Every time I've posted something, especially in the last 2-3 years, I feel like everything has gone much worse. And you know, it's enough that I have my own YouTube channel, and it's enough that I'm over here. Now, luckily, my London crowd here, you guys and girls are very polite. You're eager to learn. You know, you are not here to argue or anything. And of course, we get trolls every so often. But on Twitter, it's troll after troll, like keyboard warriors wherever you look. It's just insane. Alright, so let's wait for another 14 minutes and then I'll see whether this RBOB can make a move. I mean, I suppose it's a combine, so I can front run it. It's just the volume is not really telling me that this is going to be some big push. Because look, they tried and now it's still very low, even on a 3-minute chart, 2-minute chart. Like it's barely popping near the average. I need like at least 3 candles to hold above the average volume. And then we'll have enough to push. And it's not going to be the biggest trade because it's ASR high is just here. Even though we have a bigger target at 2 evens, which is taken from the gamma levels. Now gas is selling off from VWAP. Again, I don't really have a good level here. So we'll see when and if it gets to 3 evens. Maybe that'll be the trade to take on Natty. John says, D, honestly, with all due respect, I started trading CL years ago before it changed, found a good place in metals GC before I go crazy. I still traded in the demos, being careful and managing risk successfully. I know I'm not supposed to, but I depend on my trading for income. How do I know that I can't even trade micro gold and prop firm? What do I do if I can't even trade gold? Listen, there is a thing called, you know, an actual live account that you put some money on. If you're good and if you're confident in your skill set. But it is, I suppose we're tagging another problem here. Limiting yourself to one product only. That's effectively what we're talking about. So you traded gold, you found yourself there, now gold has gone bonkers, and now everybody's restricting it, or the margins have gone so large that you would either require a large amount of personal capital, or you want to use a prop firm to limit your risk. Well, I mean, if you trade well, shouldn't you have 5k in your XFA at the bare minimum? Like, let me ask you just an honest question, you know? Even trading micros, you can easily make $200 to $300, like, easily. And whenever I see people saying, oh, I'm being careful, you can't be careful on a market that is wagging around 500 ticks on a 1-minute time frame. There's no care. There's just luck. Maybe you're good at identifying when it's going into a trend. Maybe you're good at catching, a momentum so your trades don't go into much drawdown. But that still doesn't minimize the market risk. So I would still say that comment is a little bit naive, I suppose. And what are you supposed to do now? Well, go to copper. That's still not completely restricted. But if you don't even have, $2,000 in your XFAs, I would be wondering what's going on there, right? Because if you are taking consistent payouts, if you are building up balances, you need to have a plan to leave some working capital in there, not just leaving the bare minimum of minimum drawdown in it. Correct? So I don't know, what you're saying there just doesn't track. Doesn't track. Yeah, exactly. The real Enoch. 10K account on gold is fine risk amount. And then you get risk per trade, 260. Yeah. Savage Sand says, interesting how copy trader might cause mistaken hedging because of a lag. D, is it considered hedging if the opposite trades are taken between practice account and ineligible accounts? Yes, unfortunately. Yes. And, we're talking the same server. XFAs and combines are sim. They're not live, so they're on the same server. So if you are in, one core position and then you're messing around on the other one, my first question would be why? In any situation, as an intraday trader, you shouldn't be in opposing positions on the exact same product. It serves no purpose. Serves no purpose because one will go into so much drawdown and the other one will make you money, but then you still have the other one that's in a drawdown. So what's your what is the goal there? And if you want to do, I've seen people mention hedge funds on Twitter as if they know what they're talking about. Hedge funds will not outright trade a futures contract long on GC and then the short in the exact same, company to hedge. No, they will use an options trade to be long or short there, and they will use an outright futures contract to be in an opposite position. That's a proper hedge. So to me, people talking about hedge funds, but they're purposely hedging. They're not hedging on the same outright product. I'm not going to say it, but I was really annoyed when I read that. I was like, you have no idea what you're talking about. That's not how hedging works. There's the spread trades that involve two legs of an option, right? So you're maybe looking at short calls, but at the same time you want the upside protection. So you might do a long call as a sort of a stop loss kind of situation that will kick in case the short call goes a little bit wrong. So you want the limit. But then your profit from the hedge is going to be the net difference between the premium received and premium paid, between the short option and the long option. That's how you hedge. You don't hedge by going short MGC and then long MGC. That's not a hedge. That's like nonsense. If you want to hedge, you go long silver, short gold. That's a hedge. It's called the silver gold ratio, the GTR. That's a hedge, but they're two different products. And that's not hedging in Topstep. You can do that. Just don't do it on the same bloody product. It's like, I really don't know how clearer we can be, But talking about hedge funds hedging in the space where the retail doesn't really know what a hedge fund actually does and how they hedge their risk, it's just beyond hilarity to me. It's like, come on. Yeah, exactly. Really, hedging means that you have no idea. You should just have your own bias. Yeah. And as traders, we need to know whether you want to be a buyer or a seller here. You can't be both, or just do whichever one. And you won't learn anything from it either. You won't learn setups properly. You won't learn which playbook goes into a drawdown, which one doesn't. You won't learn which stop loss size survives your particular playbook. You won't learn anything. And, if you're using a copy trader, be mindful that if you hit the reverse button, there will be a lag. Guess what? It's tech. It's not instantaneous. So I don't know. People have only themselves to blame. You know, if you're using copy trade or anywhere, not just on TopstepX, but anywhere, there's always a lag. There's always a lag. So, you know, get familiar with how these tools that you operate with actually work, and make note, you know. Don't do risky stuff if you're trying to replicate one thing. Speed is not how you do things on copy trading. And if you're a scalper who's like holding trades from like 1 minute, 3 minutes, and you're using a copy trader, just know that that is going to expose you to so much execution problems. A ridiculous amount of execution problems. And the more accounts you're copy trading, the more mistakes you will have to deal with. And now, prop firms are just tightening up on that. And frankly, when I ran my own prop department many years ago before COVID, I didn't want hyper scalpers. I said no to all of them. There was only one that was mildly profitable, but then we ran him through like a 6-month watch list just to see how he traded. He ended up break even. After 6 months, it's like all that work and all those trades and you end up break even, right? And I wouldn't want people who are staying in trades for really less than about 5-6 minutes. Like, you can be a scalper, but you know, I want you to be a discretionary scalper where you will do 3 to 5 scalps per day if you're a manual trader, and you will be done. But that's not a million trades, and that won't expose you to, oh, no, I'm going short, no, I'm long, no, I'm short, no, I'm long. Like, that is not scalping. That's just like trying to catch every tick here and there. That's not what real scalping is. Scalping is just taking the smaller amount of ticks than your average trader, right? So you get, but the process is still the same. You have a level in mind, and then you wait for something to happen, and then you just get that initial momentum, and you're out. That's the professional scalper's way. And then you see the same thing, maybe on a slightly smaller level that I look at, but maybe you have, like, let's say, one trade. Let's use something that has more levels. I mean, yeah, let's use GC, whatever. Let's say that you have a decent level. Let me just load up the chart here. Yeah, so let's say you have a level at 5,000 where you maybe want to snipe along. So once it gets there, you don't chase it down to that level because there's nothing here. Okay, there's VWAP, but it's in the middle of the middle. So really, a good scalper is not going to run a nonsense trade on the idea that 5,000 will be reached, because that is not a given. So whatever level you have right now, is this a good level? Is this a level where institutions might get involved? Probably not. But 5,000, you might want to look for those buyers. And then once they appear, you get your pop and you're out. But then you don't reverse and go, oh, I'm now going to go short. Because that's a FOMO. That has nothing to do with trading properly. I've never met a scalper who's manually executing 100 trades per day. I've met market makers who have one core position in the options, and then they will use certain levels of open interest to hedge their main position. Again, that word, hedge. But they're not using two accounts where one is long, the other one's short. It's a different product, different vehicle of execution. So we really need to learn first what hedging means before we start saying stupid things on Twitter like, oh, but hedge funds hedge, it's in the name. Yeah, but they don't do long and shorts on the same outright product. Like, I just, and this is why I don't get involved, because I get very heated. And I would just end up calling people names and stuff because I'm a Mediterranean person who's very, very passionate. But at the same time, I just can't be bothered. I just read the comment and I just go, okay then, buddy. If you think that's what hedge funds do, you do you, mate. Yeah. So to me, it's just ridiculous. Absolutely ridiculous. So, you know, again, hot take. People are probably going to argue with me on this. But, you know, hedge in the hedge fund is not what most people think it is. So, yeah. Anyways, let's move on. Right, so we got one candle here, but unfortunately we're reaching the ASR almost. So that was a trading idea that I wasn't sure about because of the time of day. So what comes next? Well, let's say that we go somewhere closer to 2 evens, or maybe just to 199. So somewhere here. Now ADR high is at 199.07. So what's next? Well, if we get to If we get to 199 and crude oil is somewhere between 64 and 65, depending on how much it will move, I might be interested in a short pre-market NYMEX. That'll be my next idea. And to be honest, this one wasn't really the biggest one anyways. Yeah. This is now, the market's starting to wake up slowly, but it's not properly going to be alive. And then whatever they do now, they might sell it later on. So that is the next thing that I want to be in on. Nat gas tried to go below the Asia low, but Asia was so small. Is that actually a relevant idea? Until we reclaim VWAP on Natty and this former GEX2 level, which is probably still a relevant level. Oh look, it's still GEX2 today. Yeah, this is the thing that I love about commodities, that some of these levels, they just don't change. They stay relevant. So 320 is a reclaim, and then maybe we have a long Natty for at 125 take profit. If it doesn't get there, then we'll have a time-based target as well as price-based. Really not has the right idea. I just spent 5 months every day in a row, no sleep, to fully study and to understand. And now I'm a certified funded trader in 12 months. Time is everything. Rome wasn't built in a day. Yeah, and you've done it very quickly as well. Most people, because of the mistakes and because they don't want to journal or they don't want to look at the market risk critically, positioning, you know, all of that, they spend years spinning their wheels. We're talking 7 years, 10 years. I've met a guy who spent 20 years bumbling around and not really making money. And then he was like, well, I really need to sort this out. And I'm like, well, are you writing a plan? Are you journaling? And he said, no. Right, so you're doing the same thing, just sitting down, clicking buttons, not reviewing, not really looking at what worked, what didn't work. And you expect that somehow, at some point, you're going to get better. That's like me being a musician. And when I started, not doing any scales, not practicing, you know, more sort of slower tempo on a challenging piece, and just kind of flying through it and expecting that it's one day somehow all going to click. There is a mind-muscle connection. There is definitely a memory and speed of processing whilst you're trading, and all of that is massively amplified because it is money, because it's emotional, and because FOMO is a real thing in markets. You know, and then there's the dissonance, right? There's a dissonance when you're expecting one thing, but the market starts doing something else, and then suddenly you feel uncomfortable. But what if you recognize that it is dissonance between your expectations and something happening in real life that you didn't think could happen? How do you deal with that? Well, most people's bodies react with a fight or flight response. And then they do stupid things because your primal side of you doesn't know anything about levels. It doesn't know about risk. It doesn't know about stops. All it wants to do is survive and keep you alive. Mistakenly. Because it's not an actual death threat, is it? move this. Can I lock these up somehow? I can. Okay, let's lock. Right, now we cannot move them. Alright, RBOB is reaching average session range high. It's a little early for that though. I mean, if they still reverse it, then it's valid. I just prefer that ASR high gets reached kind of like midday. But I mean, it is a level of London potential exhaustion. I do wish that we are sitting at 64 on crude oil. So let's put crude oil here. I don't trade it anymore intraday. I will still pop in an option trade here and there when we are at extremes of the weekly ranges. Another person, I can't trade MGC on my Express Funded account. It is a combination of restrictions, but it is also a combination of how much balance you have in your account. At the moment, AMP futures cite just under $5,000 on one MGC contract. And if you don't have $5,000 in your XFA as a balance, then you won't be able to trade it. So it's a combination. There is a general restriction on everybody, but there's also a minimum balance based on margin. So don't freak out. It is what it is. Trade something else. But don't trade something you've never traded before. You know, try copper. Copper is also a metal. I mean, look, we had COVID, and back then I was still a crude oil trader. Crude oil went negative. And I traded gold as well, and ES, and DAX, so it's not like I only traded one. But the exchange actually suspended trading crude oil for a time. So what was I supposed to do? Go crying to AMP and go, hey, can you give me... And the AMP futures would just go, well, it's a CME. We've got nothing to do with that. This is a similar thing, you know, it's a similar thing. It's just, it is how it is right now. And don't worry, markets will be here forever. We're just going through a little bit too much liquidity at the moment. So don't despair. Use this time to maybe run some paper trades, not on combines, but actually, if you can't trade it, write down where your stop loss would be. Write down, you know, platforms like Hedging, it's a journaling platform. They have a way to just input a trade that you are thinking about. Run a paper trade. Like back in the, like when I started, you had a demo account, but for the most part, you can only keep it for like 2 weeks. So what we used to do, we used to take a piece of paper, actual piece of paper, write down time of it, stop loss, number of, you know, ticks where, and then I would just put a marker on my chart. Now I like to hack web tools. So let's say I want to go short on RBOB from ASR high on an 85 tick stop, because that's what my market risk is telling me. And then you put a marker. So that's your entry, that's your stop. This is your 1R, 2R, 3R. And then you just leave it. It's as valuable as being, like when it comes to data and what is actually happening, as valuable piece of data as you being in an actual trade, because it's on the chart. You can see it visually. If it starts to not work, you write that down. And you write down MAE, maximum adverse excursion, went to minus, I don't know, 10, 15, 20 ticks. Stopped out, well, losing trade. Did it wick you out and then reverse? Put that down as well. Then say, like, if it did wick you out, like let's say that I tried to go short maybe here and then it wicked me out, but then we wick out even more and then we reverse eventually. Is this me not placing a stop where I should be placing it? Is there something I can derive from this piece of information? And I'm not in this trade at all. but it's a trade idea. So use this time to get better as a trader going forward. Then you ask yourself, well, what would have survived if there was a move down and a movement away from it? Have a look at what size stop loss would have survived. So it's like, okay, well, I tried a tiny one. Was I right on the general direction? So what if I used the bigger stop? Would I have caught that at my entry price point? And if the answer to that is yes, well, then you have data that your stops are probably not appropriate for the types of setups that you're trying to execute. Sometimes the biggest problem that I see in a trader, not all of you, but some people, is that they're doing great on their personal account, but they're nitpicking on prop stops because they're like, well, I don't want to risk more. But it's a matter of market risk. It's not a matter of, do you want to, like, if you don't want to risk that much, if you can, size down, obviously. But then they're like, well, but I want to trade, 1 mini. I get it, but why don't we try 3, 4, 5 micros? So start with 3, add up to 4 and 5. That minimizes the immediate risk, because if you get smacked in the face and you're outright wrong, you only lose 3 micros. But if you're right, then you scale in to 5, right? Makes sense. So prop trading is very different. But don't despair. Like I said, it's only this time of the year when things are a little bit weird in the metals and we have to adapt. But that's not to say that observing the markets may not yield positive results for you going forward. Yeah, copper's moved. Look at copper. We're below Asia low. Is this now breakout? Or are we going to wick below it and come back into the range? If we break out, this is going to put me on the short side of things. This was the LME anchored VWAP from last week. Right now, they're holding below it. So that could be a breakout. So even though I might not trade the breakout, it offers us valuable information later on. Because usually if you're going to be Asia range bound for the day, which happens on most days, they will wick below Asia low, then reclaim it, and then go into at least 30% rotation, sometimes even 50 and 100, depends on what you're trading. Copper is more on the side of 30% retracements if you're short, but 50% retracements if you're long. It's just stats. Yeah, trading nickels, I'm with you. I mean, I've made shorts about the hilarious rules that some people have. Some people have mentioned a couple of companies to me, and I just went on the website and my head was hurting. I was like, if you have to like explain to people on like 20 pages of rules, it's like, just and let people trade, Like, what is this? It's okay to have like 5-6 rules in place. Don't have a problem with that. All prop firms had them, online or otherwise, old school too. Things like Topstep doesn't have that actually, the news trading. So every prop firm that I worked at prior to the online prop firm exploding, they had the rule of no trading in and around the news because it was all live accounts and they knew that the liquidity is pretty terrible. So it was 4 minutes before and 4 minutes after the release, you're not allowed to trade. That was like it. But you didn't have anything to stop you from trading, nor would they close out your positions. It was your responsibility. And if you didn't do that, well, you would have to respond to the risk manager, who would just cut, the shoulder tap, that's a real thing. So you would just be trading, you would do something stupid, and suddenly you would be like, what is this? It's okay to have like 5-6 rules in place. Don't have a problem with that. All prop firms had them, online or otherwise, old school too. It's The risk manager's tapping you. Or in the more recent times, you would get a private message popping up on your screen. And it's going, can we have a quick chat? Like, that's like going to the principal's office. It feels horrible. And you want to try and not be in that position, right? But nowadays, we don't have that. It's just us. And, yeah, you do something silly. So a few rules is okay. You know, it's okay. But rules where it's like immediately from the get-go, it's like, oh, if you have a drawdown and then you have a target that is overshooting that, and then if you make 5 grand in one account, then you can't make another 5 in the other account, and then and I'm just like, just stop. Just stop. Just no, I'm too old for this. I can't. My RAM memory is at capacity. And then I just go away, you know. So yeah, I don't even sign up to try them out. I'm just like, this is too complex, man. Why is my only... And I get why. It's because a lot of them are new. You know, a lot of firms are new and they're trying to stay afloat. So they want to make sure they don't pay out too many doll hairs in the first sort of year or so, because that's going to put them out of business, right? So you want to make sure that you gain some cash flow before you start paying people out. It's a normal business model. No, you know, before you start hiring more staff, let's move this to reality, you know, any other business. You start a business, initially it's just you, right? You're doing everything. Then eventually you start turning some profit. And then you're like, hey, maybe I can hire one person to help me with this. So you hire one person. And then the company grows even more. So now you have a little bit of money for a marketing budget. So now you're like, well, how much money should we spend on marketing? And then you spend extra money. It's exactly the same math, only applied to prop firm evals, payouts, and maintaining the cash flow positive curve over time. Okay? It's the same thing. But for some reason, prop firms stick for that because they're seen as conflict of interest between the trader and the prop firm. And look, for most firms, it's not like that at all. Yes, they're there to make money. They're not charity, okay? This is the financial banking business. We all love money. That's why we're here. Let's not beat around the bush, right? But there are certain players that are solely focused on them lining their pockets whilst not paying traders out at all. At all. There are still players like that. But most bigger firms that are in the top 3 to 5, they're not like that. But they are aware of cash flow. You know, do you want the prop firms to be here? Well, then the prop firm has to take care of their own cash flow. It's, you know, or do you just want all prop firms to go bust and we all go to trading our own accounts, costing an arm and a leg to learn? Is that what you want? If not, then let's all collectively stop being mean to prop firms. Yes, they will make mistakes. Yes, they will learn along the way. Yes, some rules won't be as favorable to the trader because, again, the firm is trying to make sure that their math and their cash flow is solid. Without cash flow, you have no prop firms. It's a business, right? And again, we're supposed to be risk managers, risk takers, but risk managers as well, who presumably know about cash flow. But what I see on Twitter is that people are just like not even considering that side of things. They're only thinking about themselves. So you tell me, how are those kind of traders different than the CEOs that are only looking to line their pockets? Because you guys are doing the same thing, right? This guy wants money. This guy wants money. This guy is willing to go to whatever means to do that. So is this guy. Hedging between accounts, even though they're like, oh, I didn't mean to. Great. So then maybe be a little bit more mindful about how you're managing your trading. But no, people have gone too loosey-goosey, right? And now everybody's crying because they broke some rules, however minimally, you know. And now they're like, oh, boo-hoo. They don't want to pay me. It's like, well, yeah, because look, the risk systems will get tighter and tighter as, like, I don't know, maybe there's the AI that's also using data analysis to analyze big sources of data. And maybe they've implemented something new. I don't know. I'm not an employee. I'm not privy to those conversations, right? But I do know that some of the other firms do have some fairly strict hedging rules. Some of them don't even allow you to hedge between the same asset class products. Like if you're long copper and short gold, that's still considered a violation. We don't have that. You can absolutely run one short gold, one long copper. Nobody cares. But just not on the same thing. You know, it's a burning issue right now that shouldn't really be an issue. It's like, why? Where am I from? I am originally a Mediterranean mix. You know, we have a very interesting background, but I was born and raised in Belgrade, former Yugoslavia. However, we've always had ties with London. My older sister was born in London, and my auntie lived there for like 40, 50 years even. And at some point I got tired of the nonsense that was going on in the 90s in former Yugoslavia. So I decided I wanted to live my life without having to go through another war by the time that I'm 20. And I came to London, and I've stayed here ever since about 2000, early 2000. However, I bought a house in the English countryside, so now I'm actually living an hour and 15 south from London. Because I've got 8 dogs, and they need space, and I don't want to have any neighbors. I want to be hermit woman forever. Camilla says, can't confirm me, it took me 5 to lock in and change. We should have done it sooner, but glad we got there. Yeah. Muscle memory, but psychology is also everything. Well, it's strange how that works. Psychology, when you finally stop doing silly things and base things on data, suddenly doesn't really have a problem. Alright, so this copper seems to be turning around and reclaiming Asia. This one's not doing what I wanted to do, so let's try one micro copper here. Now, I can't do the proper scaling that I was doing before, so, yeah, I'm just going to run like a core position of 4 micros here. So long. So what I've been doing, I've been practicing to enter, to scale in, because that's kind of been my pain point. I had a way of scaling in when I would be in with like 15 or 20 contracts, and it would be one scale in on the trigger, another one on a small drawdown, and then the third one when we moved just a little bit in my profit. So basically everything within a really tight zone. And one thing that made me super uncomfortable is to add when it already starts going in my direction. So I did some math. Micros are a new thing for me. They have only been around for a few years from my perspective. And because, I still have my larger accounts, I never really gave it much thought how I can, do stuff with them. But now I'm starting to see the power of doing them. It was just minis for us. And even if you had a 4.5K prop account, you could only trade minis in the beginning. So you have to be very careful what sort of trades you're going to be doing. Because 1 and 2 minis was all that you could actually trade. So if you wanted to scale in, you had to go from 1 to 2, which is a lot of risk. Now, I can only add 1 here because I tried it out earlier and they only allowed up to 5. And that's probably due to the balance because I've just started this. I have another one that's a little bit further out, but again, I'm testing this copy trading out, which I'm not in favor of. I'm not super in favor of copy trading, especially not for the more novice accounts. Cedric says, do you know if Topstep communicated on MGC restriction details? I can trade 1 MGC on my 150K XFA. My 50k XFA has more drawdown. Yeah, you see more drawdown, but how much account balance do you have, Cedric? Because that's the real issue here. If you have not enough balance in it to cover the margin, which is replicated and simulated as if it's a real account, then you won't be able to trade it. And according to AMP futures, I mean, let's look at the day trading margins as well. I use them as my guide. So margins on micro copper for day trading are only 330 per 1 micro. So again, if you don't even have 300 profitable balance in there, regardless of the drawdown, that's not going to work, right? If you are looking at trading gold, then you really need to have a minimum for day trading, not for like overnight positions. Minimum would be 1,225 to open 1 micro gold. So not enough balance. They're not going to allow you to trade that. So it's a combination of restrictions, general restrictions for everybody, and how much balance do you have in your XFA. Not enough balance, you can't trade metals. Very simple. So like I said, even on a combine, let me try and add 2. You will see that it won't let me. Oh, now it's letting me. So this morning when I tried to do this, it wouldn't let me. It was like, oh, maybe it's because I went over 1,500. But yeah, when I was slightly under that, I was 1,400. It told me I can only do like 5. So it only scaled me into from 4 to 5. And then it was like, I'm like, whoa, okay. But then I grabbed 100, and now they've opened it up a little bit to 6, right? Not that I wanted to scale into 6 here, but here we are. All right. So let me close out too, because I was just trying to think that they're not going to allow me to do that, and this is not the scaling points that I want. So what am I? Long. So I need to go get out. Of a short. Okay. Right, so we're back to 4. So I can scale in twice. We're gonna try scaling in 3 times, but if it tells me no, so we're gonna see how many we can trade on 1,500 balance. These are just my scale in database points. So 1 at 10. And then past this, it becomes the way I'm doing things with my stop sizes and all that. It becomes mathematically unsound to keep adding because your average gets messed up too much. All right, so I've got 3 here, 5, so 4, 5, 6, 7. Let's see if they continue to move it and whether it's going to tag me into all 3 or whether it's going to tell me no at this final, which is not the final one. I also want to do one at 34 ticks, but again, we're just testing. We're testing, right? So on a 1,500 balance, you can trade definitely 5, 6 now. It has to be over 1,500. But I think they're going to be having the maximum restriction of 6 again. So I don't think this one's going to get tagged in. Again, this is why combines are good, because you get to test things out. Yeah, stop loss is fine. I'm growing out my gray hair, guys. It's coming along really nicely, actually. I've got about that much growth. I've only been growing it since about, what, May last year? Trading Nickel says, I can't trade well under pressure for bills. I Me neither, unless I have savings for about 2-3 years worth of bills. That was the only time that I felt comfortable trading, because I knew that my next paycheck would not mean do or die, like you're either surviving or you are potentially homeless, right? So yeah, if you do want to do that, I would say don't do it until you're like a proven trader and you also have absolute minimum 2 years of savings for all of your bills, all of your kids' college and whatever other regular bills you might have. Otherwise it feels horrible. And even 2 years is like the bare minimum. I would say more like 4 or 5 years. Then you don't really have the same pressure. Claude AI. I like Claude. Yeah. Trading nickels. I do code some stuff myself, but not if we're going to be releasing a product. Like you've all seen my indicators if you were ever on my stream. You've all seen my charts, right? So all of these are our indicators. Blatech is the company. It's like blah 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 tech. Blatech. It's not my name. I joined them a while back. We joined forces. So yeah, all of that, and you know, things like coming up with back testing levels that are just no lag, no nothing, like memory completely optimized. I can't do that because I'm an okay coder, but I wouldn't even know where to begin, to be honest. In order to keep our products to a high standard, yes, I have a software team. Do I sometimes get involved in the solutions? Yes, but most of the time I won't be the one spending all of my days working on the indicators that we plan to release. However, if I need something, like for example my little GEX levels and stuff, I coded that. Basically, I have an API that drags options data and then crunches them up in a couple of algorithms that I coded from the ground up. Not AI, just me. And then I just did some tests of whether everything was working properly with the help of the AI, because I hate doing testing and stuff. So yeah. All right, so we're gonna keep this on 30-minute time frame because right now there's nothing else to do. We had a wick below the Asia. They might test that again, but my stop is well below the Asia low. And if they really close the next 30-minute candle all the way below Asia low, that would be my early exit if I can. But for now, we have reclaimed the Asia range. And I'm going to see if I can get it somewhere in the zone between VWAP and 592. It's kind of the edge of this whole consolidation area that we had since 2 a.m. GMT in Asia. So this is the target zone. So whenever we get there, I will be like, okay, that's enough for London. Trading Nickel says FTMO was the gold standard. They still are. They still are in that thing. Gemini helped me build an indicator. Yeah, Gemini is good. It's the reasoning is pretty solid. I tried it like a week ago or so, and very, very similar, if not better, And then Claude. Right, let's see. Let's look at the time and sales actually for a bit. And we're gonna look at the full contract, not the mini, because I want to see what the big boys are doing. And I do prefer bookmap for this, but we have time and sales here too. RBOB just stuttering around the ASR high, but not quite rolling over either. So I'm going to hold off on that until later and focus on this copper trade right now. And also want to see how many they're going to tag me in. But I mean, it's only 6, isn't it? Let me just remind myself of the restrictions. I think it's 6. Yeah, it's 5. Yes, it's not really going to tag me into the other 2 either. So overall, it's 5. Or was this the old one? Oh no, this was the 3rd of February. Sorry, I'm reading the wrong post. Again, very early. I mean, it tagged me into 6 earlier, so I would imagine that's probably it. Can someone remind me what it is? Like what do they... what browser do I use? My browser doesn't let me do what you just did. I just use Chrome on Windows 11. Doesn't let me do what you just did. It won't let me snap in custom design. Do I have the custom design? All I have is the full screen here. I don't... What custom design? Am I understanding it correctly? I'm like, what? Savage Sound. D would prefer mini product bookmap with thin book. Or micro product bookmap with very liquid ladder. I've actually traded, like RBOB is thin. It's thin, it's a mini. But if you think that RBOB is going to look anything like an ES ladder at any time of the year, that's just dreamland. So it gets a little more populated during NYMEX, but not much. It's still pretty gappy, right? Because whoever's trading RBOB, they have to be in it. They're not like... I've just realized I have the personal daily loss limit set instead of the personal profit target because it's a combine. I know I do not need anything, but I do want it to limit me if everything goes crazy. Yeah. See, that's the kind of mistakes I do when I do things before coffee. I do not talk to people before they've had their daily dose of caffeine. All right, so tag me into one of them. So now we're in with 5. Yeah, so I would say minis that are thinner, because that's what I've been trading for a long time. So full minis. Why? Because the hedge funds and institutions and market makers, well, market makers will get involved in micros because that's their job, to generate liquidity. However, I would always look at bookmap, what the institutions are doing. Even when trading micros, I will look at the mini contract. Okay. Let me just have a look at MGC because we had the situation last week. All right, I mean, that's still gappy, but I bet that the main contract is just, well, I mean, it's, again, it looks better than it did a few a few days ago. For copper, looks normal, guys. We have one, like 0 or 1 tick spread. So either no spread or 1. Similar to micro. So I think the juice has come back into copper at the very least. Silver, I don't know. I wouldn't. Yeah, silver is terrible. Silver micro looks better, but it's still, I mean, look at this. This shouldn't be the case. So yeah, I'm gonna stick to my copper, guys. Copper jackets, copper trading, all that. Because both the minis and the micros look pretty populated, so yeah, that's the only metal that we have on Topstep that is actually sane. Come on, tag me! I want to see if they fill me with 7th or whether the restrictions are still 6 on 150. Hoodie, you're asking a question that should be asked to the employees of the Topstep. I'm a contractor. I'm not privy to any meetings that they have behind the scenes, so I know as much as you do, mate. I wish I could help, but I do not know. You know, I've seen on Twitter, again, that pesky Twitter, people bash a lot of us coaches. Like, Topstep does something, they're like, oh, the coaches are really quiet. And I'm like, I know as much as you do, right? It's like, I have no idea what's going on either. It's like, why do you assume that the contractors, we're external contractors and external traders, who, yes, are on air, but we are on-air personalities, right? We're traders who have been pushed to the front because of X, Y, Z, whatever. But we are not employees, right? We are just... We are the last ones to find out as well. You know, some of the things that they do, they will inform us after the fact. They'll be like, oh, yeah, by the way, just so you know... we released this, so don't be surprised. And we're like, okay, thank you. That's the extent of our knowledge, you know. We don't sit in meetings with the team. We don't get to hear the conversation of the plans that they have. So we hear them usually pretty much at the same time when you guys hear them, okay? So just keep that in mind when you're bashing coaches and traders for doing this or not doing that, or, you know. I know that we're more visible. I get it. But I promise you that it's all the same. We're all in this together. And I know it doesn't look that way because it, you know, yes, we have more contact with the team. More contact doesn't mean we sit in meetings and know what's going on, okay? But we are informed fairly quickly if it concerns our shows. If it doesn't concern our shows, we shall not be informed because it doesn't concern us. It's an internal company thing, right? So yeah. So you give us way too much credit for having to know stuff. It's like, we don't. I want to help you. I really do, but I don't know. So that question, you know, why did they change the rules and now they can do this so that, I don't know. I really don't. So, you know, ask Mike Patak, you know, ask people who will know, but I don't. So, yeah. Yeah, it's only TopstepTV stuff on here. Bruno is absolutely correct. So you can ask me about TopstepTV. You can ask me about the TV schedule. You can ask me when I'm going to be on. But just don't ask me about changes. And because I don't know. I really don't. Right, so we're still sitting above this Asia low. It's a quieter period of the day, right? So we need to wait until... probably until another half an hour. So then we're going to get the LME open and then we're gonna get some movement. And I've gone over time again. Jesus, time flies. So yeah, let's have a look at what the day brings. We will see you again. I need to check my schedule. I should really do this before I come on to actually check my schedule. Because, you know. Oh yes, I am on past markets today. And I'm on group coaching today. Wow, I have a busy day. Yeah, so you will see me twice again on the daytime show. In the meantime, don't freak out about the restrictions. Like I said, it's only a few days, you know, maybe a week or 2 or 3. But you're going to be doing thousands and thousands of trades in the space of your career. What's a couple of weeks? So I'm going to say. So let's all just be a little kinder to everybody around us. There is no need to add fuel or fire. I trust the risk team to do what's best for everybody and themselves. Yes, because they're not a charity. They have to make sure that everything runs smooth. So until then, let's have a look. I am probably going to be trading Combine still because of the restrictions. Because I can't really practice what I'm trying to do in accounts that matter. So, you know, we'll see what the markets bring. But in the meantime, remove risk. Still use data to position yourself. And I will see you a little bit later for fast markets. That's all from me. I'm Marcus D. This was the Euro Trade on TopstepTV. See you in a bit. Take care.